All right, I hope everyone is having a great weekend. I am doing my first video on YouTube here, and I aim to just provide some insight into why I believe Bitcoin is near its conclusion of the current cycle that we're in that began December 2018. And why, contrary to popular belief, I don't believe we are in a bear market rally or the beginning of a new bull market. And let me just start there for a second. I'm big on um, sentiment and herd mentality, and going against both of those things. Um, the herd generally is wrong. In human psychology really fascinates me, and when we're kind of programmed, right? There's safety in getting approval from others. There's safety in aligning your thoughts with the thoughts of others. And so I understand why the market is feeling the way that it does. However, I aim to look specifically at high time frame charts, Bitcoin cycles within themselves to find objectively uh, the story that has been told. Not that that guarantees anything about what's going to happen in the future. So always a caveat there. And please, this is not financial advice. This is just kind of my views on the market and where I think this is going. I am not a financial advisor. So we are just taking a shot at what I believe is the direction of this market at a time when the least amount of participants are expecting it. So with that, let's just kind of start. Let's just start looking at you know the basic structures within each of these cycles. Okay, if we look at the first cycle, lasted about 581 days. The second cycle, and I'm defining the cycle from peak to peak. Obviously, the first cycle there's no peak, but you get what I'm saying. And then the third cycle, peak to peak. What we do see in terms of just the amount of time, and one would expect, right, as more market participants enter market, the cycles get a little bit longer, they get potentially less volatile, and potential less diminishing or potentially diminishing returns. And so with the second cycle, we did see was longer than the first cycle. The third cycle, we did see was longer than the second cycle. Now, if I'm to believe that this cycle peaked in November of 2021, that would put this most recent cycle at right around the same cycle length, a little bit shorter, in fact, than the previous cycle. Okay, so that's suspect to me. That hasn't happened before. And so, if we're saying that, it all revolves around 4-year cycles and the Bitcoin halvening, well, there's strike one in my book right now. Okay. This would be the first time that didn't happen. Strike one. Uh, what's strike two for me? Well, again, in the context of, hey, this is what happens all the time. You reach your previous all time high and you're on to a new all time high. You breach a previous all time high, you're on to a new all time high. Well, we breached a previous all time high here, right? And what happened? Nothing. It baited a lot of people, myself included, to thinking that we were going higher. Now, positionally, I didn't make any um, new moves, right? I was just kind of sitting comfy in spot from accumulating far lower. But again, I was expecting much higher prices. That didn't happen. Okay, so that's strike two. What's the third thing that didn't happen? Well, the third thing that didn't happen is something that has also happened in the previous cycles, and that is these impulsive moves, right? If we look at Elliott wave theory, defines kind of market psychology and emotion in waves, and on a higher time frames, those can be demonstrated in riding these impulsive waves up. There's look at the moves within these impulses. They're clearly expressed in RSI readings that are overbought, so over 70. And so each of the previous cycles, you've got impulsive wave up, and then you've got a corrective wave 2, you got a third wave up, expressed in RSI, corrective wave 4, also expressed in RSI, and then finally a corrective wave or impulsive wave 5, also clearly expressed in RSI. Let's look at the next cycle. Well, again, it did it again, and you would expect to see that, right? If Bitcoin is going to make what's considered an impulsive wave move, which is a massive appreciation in price, you'd expect RSI to also reflect that. And what does that mean to me, right? An overbought RSI is a sign of strength. They don't happen on a weekly time frames that often, right? We're looking back at the entire history of Bitcoin. I equate overbought RSI to, let's say, a dam, that's holding water back, bursts, and the flood of that water, that power of that water surging is RSI. And if we think about price as, a raft on that water, well, it's going to get pushed with this flood, with this dam bursting, it's going to get pushed. And then as that water subsides downstream, right, the power of that move subsides, price eventually kind of follows, right? And so in each of these cycles, we clearly have impulsive moves marking what I consider first wave, and then corrective 2, impulse shows up in RSI 3, corrective 4, impulse into the final peak, blow off top, and that shows off in RSI as well. Well, let's look at this previous cycle. What happened? Well, we've got one, right? Our first impulse off the low, the bear market low, clearly expressed in RSI, overbought on the weekly. Okay, that's a signature that matches up with what we've seen before, right? And then we've got a corrective 2 that also shows up in RSI. And then we have an impulsive 3. And that shows up clearly as a very powerful wave, right? In each of the previous cycles, that 3 shows up very clearly as a powerful wave structure. And we saw that. Now let's just assume this was the all-time high of the cycle. What happened with RSI? Well, we didn't breach 70. More mimics, corrective structures that we've seen, in other places, in RSI. So to me, that demonstrates this again. That's another point of confluence that this was not an impulsive fifth wave. This was a corrective structure, right? A flat type of correction that was very brutal, that was very long, that we also saw in traditional financial markets, that really got people thinking herd mentality, right? We're headed for a new bear market, and people had positioned for this bear market going into the end of last year, which is why I contended we were at one of the most optimal times for risk reward that I've ever seen, quite frankly. And so here we are today. And that there's two last points that kind of show confluence in this theory. And I reviewed so far several of them, including RSI, including length of cycles, including the overall market sentiment. But let's look at a couple other considerations. So let's assume for a second that these are in fact correctly labeled impulsive moves and corrective moves within the cycle. If we look at the last 3 cycles, our fifth wave impulse was the steepest, 75 degrees, 49 degrees, 47 degrees. Steeper than the third, 21 degrees, 42 degrees, 57 degrees. Let's just assume we are in a fifth wave impulse, and the angle of this impulse is equal to, okay, and this is something that hasn't happened before, but let's just assume that most conservatively it's equal to that same third wave impulse. Well, that indicates a price of around 165,000 prior to the end of October. And that would most certainly align with where RSI is right now on the weekly, right? We're at similar levels as we were coming out of this 4 into wave 5 here, coming out of this 4 into wave 5 here, September 2013, and April 2011 coming out of this 4 as well. And what people have a hard time kind of considering in this theory is how fast this move is going to happen. Well, when the move gets going, right, you see these RSIs, the power behind these moves change very, very quickly. We're talking about a matter of weeks here. We're talking about a matter of weeks here. We're talking about a matter of weeks here. And so a move like this quickly has happened. It's happened 1, 2, 3, 4, 5, 6, 7 times in Bitcoin's history in terms of rate of change in a specific time frame. And so let's look at the last thing that also, has happened in each of the previous cycles, right? And that's the relationship between the previous cycle high and the new cycle low, and its 4236 extension off of that. And in this cycle in 2013, we saw a breach of the 4236 back test on its way to true blow off all-time high. In 2017, we saw the same thing, a breach of the 4236 off the previous all-time high, cycle low, 4236 extension, back test on its way to all-time high. Did we see that in the last cycle? No. Again, that's strike 3. We didn't have a breach of this. Now, a breach up here would be completely in line with how these previous 2 cycles performed. So a breach up here of this 4236, which sits at around 80,000, retest into the final blow off top would again align nicely with what we've seen in the past. So all that being said, again, this is just my view on the market. There are no certainties. What's happened in the past does not guarantee what will happen in the future. However, this is my base case scenario. I'm looking forward to seeing how it plays out. I hope you enjoyed this video. This is a brand new channel, so subscribe. Would love to start doing some more of these, and like the video and share the video, and we'll keep it rolling. It's going to be a fun few months for sure, in my opinion. I thank you guys all for your support. Take care.